So how does one confidently enter a trade? Well, I'm going to go through my process here, and I'm essentially going to get down to the anatomy of an entry, but it really ultimately starts with your pre-work. So if you want to enter a trade confidently, start doing your homework pre-market. Okay, so let's go through this real quick. I won't dwell on any of this, but this is the stuff that I look for pre-market. On the monthly, I want to know what kind of trend we're in. Weekly, daily, I also want to know relevant characteristics of these daily charts, weekly charts, and monthly charts. I want to know prior day high, what that looks like with the break to the upside, prior day low. What are we looking at here? Gaps. Do we have any relevant gaps to fill? I want to know those things pretty much every day. And then I write some notes down of things that have taken place pre-market that I wasn't privy to because I wasn't sitting in front of my chart all night, right? So overnight surge on the day failed to take out prior day high. The London session spiked up to prior day high and then declined and then failed and broke down. And then I want to know, is there an overnight trend line? And the answer to that is yes. There's a nice, neat, very neat trend line from the overnight session, from the London high down to current pre-market highs. Okay, then I want to know the news. What kind of red hot news do we have for the day, right? 7:30 CPI news. I want to be on the lookout for that, and I want to notate afterwards what takes place because I won't know until it actually happens, right? So I'm going to, this is a note that I jotted after the fact, but my plan with news is that I let price settle before I get in because it's highly volatile news, injects a lot of, today was the CPI report. Inflation's a hot topic, obviously, right now. So this is going to inject a lot of volatility, which it did. You can see right here on this 7:30 candle spiked up and then drove the market up here. And so you can see that we failed this prior day high, took out one of my structure levels, and then rotated, okay? So on the New York session, we rallied up again to prior day high, failed, and then reversed. And then I notated the makings of an inside Friday because we had that prior day outside day. Okay, so that's the pre-work that I go through, and that's all injected into my mindset as I'm looking for and searching for entries. Okay, so now I have an entry model that I have in mind, and what I need to do is I need to go through a rigorous checklist and make good decisions as entries develop, right? Okay, so very first thing I want to do is I want to assess, is there a location where I'm willing to do business, right? Okay, yes. So I can assess this a couple different ways. I have two levels right here, one up here, one down here, excuse me, and then I had a gap right here that formed after we failed to take out this high and rotated back down. So now I'm looking for an entry to get in. And I got one, okay? So this is big gap right here. And my theory with gaps, so we're in a big, massive downtrend. We had this big, massive move that broke that uptrend and rotated back around. And then we pulled back up into this. So we have, you can see from the deltas on these bars, you can see all the sell side imbalances on the bid side here. Negative 1795 up at the top. 1095, 2014, 3004. You can watch it kind of slow down a little bit, rotate. You can see this delta shift down here, and then this fake move up, a dead cat bounce, as it sometimes is called, that rotates back through here. Okay, so location, check, got one of those. Right in here is where I want to do business. I can see that as this develops. As this bar closes, as this bar right here closes, I can see this develop right there. Okay, so check. Trend alignment. So does my intraday trend align with my entry? So I'm going short in a downtrend. Does that align? Correct. Check. Check right there. Macro alignment. So prior to the day starting, I had the insight that there's a high potential for an inside day. It usually follows an outside day, right? Or there's a high potentiality for that. And especially in the pre-market, where price failed, or off the open, where price failed to take out prior day high and rotated, right? So that has the makings of an inside day. Okay, so that would also align. So check. And number 4 there, do I have a target? So very important. Can I make money on this trade? That's essentially what you're looking for. Do I have the ability to make money on this trade? Okay, so right in here, my trigger would be down here yet. So I want to assess this prior to going in. So if I take an entry at the low of this bar, what's my risk? Number one, my risk would be about 20 ticks. You could skinny it up a little bit, but you're kind of to the top here, so you could probably shave off 4 or 5 ticks on that. But I want to know, is there room to make a 1-to-1 risk-reward ratio at a minimum? Okay, so if the answer to that is yes, which it is, you can see there's a target at VWAP. There's a target at 48.16 here, which is the point of control in the marketplace, the point where the highest amount of volume went off in the day. And then there's a swing low here as well that you can also target. Okay, so there's potentially 3 targets here that you could take. So check, yes. Do I have, number 5 there, do I have a delta shift? And what that means, for those of you not familiar with an order flow footprint chart, a delta shift is this number right here. And what that number is that is the net difference between aggressive buyers and aggressive sellers. So you can see on my candles here, I have 2 columns of numbers. And if I zoom in on those, you'll see the number of contracts that went off on the bid and the number of contracts that went off on the offer. So the sell side and the buy side. Okay, so we have on this bar right here, we have a sell side imbalance that needs to get filled. And lo and behold, we have some buyers coming in right up here to fill it. You can see this dead cat bounce comes up. Delta goes from 90, or goes from the negative side of negative 2,000, negative 304, negative 241, swings around, breaks over to the positive side. Again, breaks over to the positive side, and then does the exact opposite and reverses back around. So you go from 1161 to 147 to 709. So you have almost a, let's call it a 15, 16, 1700, 1800 contract reversal here on a 2-minute chart. That's pretty healthy. That's a pretty healthy reversal given all the other context, right? So then lastly, my trigger. Okay, so I had a sell stop order at the bottom. As soon as I see price come into here and get in and dig in a little bit, I'm waiting for it to fill up to the top and then rotate back around and catch me on the way out. So in case price doesn't come back around and just soars right through here, I'm not at any loss, right? I'm not even in the market. But when price rotates back around, you can see the delta swing, and then you can see sellers stepping in, and then you can see the buy side declining here at the top, right? That's all good positive stuff from the footprint chart. Okay, so then price clips me in and then hits my target and I'm out. So that is the anatomy of the entry. That's how you enter a trade confidently, when you start to align your pre-work homework with your entry and create yourself a checklist to enter into the marketplace. Hope that was helpful. Good luck out there. Happy trading.